Hello everyone and welcome to this video. In this video, we will understand and forecast reserves, common dividend, preference dividend and dividend distribution tax on common dividend and preference dividend. So the first item is a reserve. What is reserve? At the end of financial year, when a company earns a profit, then a certain portion of the profit is retained in the business to meet future expected or unexpected losses and sometimes growth prospects. So this amount which is kept aside from the profit is called reserve. There are two types of reserves. One is general reserve and another is specific reserve. The general reserve, as the name suggests, they are created out of profit and kept aside for the general purpose and financial strengthening of the company. It doesn't have any specific purpose to fulfill and can be used for any viable reason in the business in future. Most important reasons include meeting contingencies and expansions that cannot be foreseen in the current year. Specific reserve. This reserve, however, is created keeping a specific reason in mind and can only be used for its designated purpose. For example, dividend equalization reserve, debenture redemption reserve, contingency reserve, capital redemption reserve. So there are multiple type of reserve which company can keep. At a time, company may keep multiple categories of reserve. So in Excel file on your sheet you can see we have the reserves in last 3 years. So this reserve we can keep as a part of profit. So what we can do, we have to calculate reserve as a percentage of profit first. So reserve as a percentage of profit, so equal to, come above this reserve divide by net income after minority. Click on this, enter, control R, convert it into percentage format. Now we can assume that company will keep 8% of reserve in the future. Come above. Now put in equal here. Take net income after minority, multiply by 8%. That is reserve as a percentage of profit. Now simply select this and press Ctrl R. Now in this case what we have done, we have kept reserve as a percentage of profit. There are multiple other ways of doing it. One of them is you can keep the reserve constant, like you had reserve of 38 in the last year, so you can keep it constant in the future also. Okay, but in our model currently we have taken reserve as a percentage of profit. So there are other ways also. The next component is common dividend. So common dividend can be forecasted in two ways. One is you can calculate common dividend as a percentage of profit, and you can calculate common dividend on per share basis. So in this video we are going to forecast common dividend as a percentage of profit. When you calculate common dividend as a percent of profit, we will call it dividend payout ratio. So equal to, come above, common dividend divided by net income after minority. Control R, convert it to percentage. Now we have to assume that dividend payout ratio will be 8% in the future also. So Control R, color it light. Do the same thing with preference dividend rate also. But in case of preference dividend will be forecasted as a percentage of preference stock. It will not be taken as a percentage of profit. So let's come above, preference stock divided by preference dividend divided by preference stock. This is my preference stock. Enter, convert it to percentage, Control R. So let's keep 10% preference dividend rate. Control R, color it. Now let's forecast dividend. To forecast dividend, take profit after minority multiply by dividend payout ratio. Okay. Now to forecast preference dividend, what you need to do? First, we have to forecast our preference stock. We do not have preference stock in the future. So let us keep preference stock constant in our model. We think that preference stock was constant in the last 2 years. So there will be no increase or decrease in the preference stock in the balance sheet. If you have certain information about the preference stock in future, you can surely update that and accordingly you can take the assumption. So let me come back to income statement. Equal to preference dividend rate multiply by preference stock in the balance sheet. Enter. Now select this, press Ctrl R. Now what we will do, we need to forecast dividend distribution tax. So dividend distribution tax is paid on the dividend. So company will be paying dividend of whatever amount, then the company has to pay dividend distribution tax also. So what we have to do, we have to first calculate dividend distribution tax. What is the rate? So equal to, come here, dividend distribution tax divided by common dividend. So this DDT on common dividend is taken as a percentage of common dividend. So it is around 16%. Control R. Let's calculate dividend distribution tax rate on preference dividend also. So equal to, come above, preference dividend DDT on preference stock dividend divided by preference dividend. Control R. Now we have to forecast this also. So equal to, we have to take the assumption also. So what we will assume that DDT will remain constant throughout the future. So let me type 16% here, and this also will be 16% because this was constant in the last 3 years. So what you can do, select this, press Ctrl R, give it a color like this, come above. So equal to common dividend into dividend distribution tax rate. Do the same thing for preference dividend. Do the same thing for DDT on preference dividend also. So equal to preference dividend multiply by this percentage. Enter. Now select this and press Ctrl R. So in this video we have understood how to forecast these 5 items, and they were very easy to understand and very easy to forecast. Now in the next video what we are going to do, we are going to prepare the depreciation and amortization schedule. There will be multiple videos required to understand depreciation and amortization schedule. So first let me calculate my retained earning. So I just select this and press Ctrl R because this was a formula. So what we need to do, we need to just take the formula from previous column and automatically my retained earning will be calculated. So for this video, thanks for watching. I'll see you in the next video.